Hi everybody, this is Meherban Faroogh from the Flip Club. Welcome to our class again. So I understand we don't have any trade plans yet. At least I can't find them on the forex street site. Now once again, let me just show you the forex street site here. So the whole purpose of these Wednesday classes is for us to provide an opportunity for the students in class, those who come in class, to learn. If you could take the time to submit your trade plan, and what you have to do for that is go on www.forexstreet.net. When you go there, click into into groups, and under groups you can go by latest activity, or you can look for, essentially what you're looking for is you can go into latest activity, maybe check that box and go down, and you're looking for the symbol 1000 Flip Club Live Currency Analysis class. Once you click on that, you essentially want to go under, write up your trade plan, whatnot, and post it under trade plans. Now, in the past few weeks, folks like Mark Knight and 4718 and some of the others, Charles, they done a fantastic job and very detailed trade plan, and very impressed and very happy with that. But if you look at the original sample that I put up there, it's a little bit probably more basic. So if you're feeling a little bit overwhelmed, and I say that only because, with respect, and only because a couple of years back when I started myself, it was a little overwhelming to even imagine trying to fill all those details out. I'm very comfortable if you take your own time, and all I request is try your best. That's all I'm requesting. Try your best. Fill out as much as you can. If you leave out pieces, we'll guide you. That's what we're here for. Okay, so personally, I think it's a great opportunity if you want to really learn forex, especially if you're a beginner to a new student, somebody who's learning forex. Don't waste this opportunity, because you never know when things go away. Okay, so just my 2 cents there. Okay, since we don't have any trade plans, what I'll do is I'll pick up a pair. I'll probably pick up one of the majors like an Aussie or something, and I'll start scratch from you. So I'll put up we can do that now. Let me go back on and show you my screen. So you should be able to see my charts. If you can give me a quick Y, I'll feel a lot comfortable that you see it. Because I'm still in the process of learning how to use HotCom. So what I'll do, thanks, Limno. Thank you. Okay, so what I'll do is I'll open up, okay, so this is, once again, for those of you who don't know, this is FXCM. You can go on fxcm.com and download the MarketScope 2.0. There's lots of other wonderful platforms and software. But for our class, and that's how we do it in 1000 Pip Club, and for this class, you want to use one platform that is consistent, so that when you submit a trade plan and I'm reviewing it, we're both on the same page. Otherwise, if you're looking at it, if the platform you're looking at is on GMT time or on Central time or some other time, versus the one that I'm looking at is on Eastern Standard Time, there's a little confusion. So just to avoid that confusion, request those students who submit their plans, especially in this class, is to go down and download FXCM's MarketScope 2.0 and use these charts. By no means does that mean I'm recommending FXCM or any other broker. That's not my job here or idea here. You should go and do your own homework to figure out which is the right broker with whom you should open up a live account. Okay. All right. That being said, let's go and open up a. So if you open up a new chart, there's a bunch of charts that you have here. I'll pick up Aussie, let's say. We do the Euro all the time, so I'll pick up Aussie this time. Now, there are certain things that I do because I like it that way. I've got used to doing it that way. Feel free to adapt or discard what I discuss in terms of the, draw a line here, draw a line there, take off the grid line, stuff like that. But when it comes to the concepts around support resistance, how to identify a support resistance, what is a Fibonacci, how to identify Fibonacci properly, those concepts are standard. That's what you need to understand and learn, and kind of go from there. Or when it comes to trend or multiple time frames. And again, guys, as I mentioned earlier, I mean, at my stage right now, I barely prepare for these classes. So what I do is I say a lot of stuff extempo. Now, unless I'm doing a PowerPoint, I spend a lot of time preparing for that PowerPoint. But for these charts and reviews, it's pretty much on the fly. So I think that helps the students in the past. So one of the first things I do is I personally don't like to see the grid lines because by the time I end up doing what I need to do, a lot of my charts would look like this, right? Lines, fibs, support resistance, that's really what I want to see. So if I maintain the grid line along with it, for me it gets confusing. There's too many lines already, and I don't want extra lines. And that's the reason why I take off the grid line. So if you want to take off the grid lines here, it's very simple. Right click and go on check off this show grid. So you have a nice little white background. Another thing you might want to do quickly is this auto scale is very important. You auto scale this, so no matter where you go back or forth, it always auto scales the top and bottom of the chart for you. Okay, so whenever I pick up a new chart, a new pair, I always start for the intent of studying it and figuring out support resistance and tips and whatnot. I always start from a monthly chart. I never start from an hourly or even a daily, right? Because it's almost a waste of time. The first thing you want to do, so even if you picked up a daily like that, right? That's of course that's quite a bit data compared to an hourly chart, and that starts. And I can keep squeezing it in. By the way, the way I'm squeezing it in is the roller ball on the mouse. You just move that roller on the mouse, and your charts expand or contract. But the best thing to do is start from the monthly, right? And squeeze in as much data as you can. Use up all the white space, right? So that's really it. These charts here start from 1993, so that's fine. You can just leave them here, right? Just about there. Okay. So these are my charts. Okay. So one of the first things I would do is I start with generally support, resistance, and then I go down to what you call the fibs. Once I have the highs and the lows and the relevant highs and the lows, I would start focusing on that, right? Okay, first things first. So, and the best thing to do is like start from the top to the bottom, or however your mind is used to doing this thing. Another thing I've learned over time is just because the fact that a lot of these lines can start getting confusing very quickly if you're not used to it. And once again, very important, if you're trying to trade in the middle of a session and if you have no idea where your support resistance is or fib is, and you in the middle of trying to take a trade, you're fumbling around trying to find something, I think you're wasting your time and you're at high risk, which is why having these lines set up beforehand and saving them, and I'll show you how to save them and retrieve them in this class, I think is of tremendous value. Okay. The point I was trying to make here again was what I've learned over time is have some standards. So for instance, support resistance lines, we'll see I have it in either gray or black, doesn't matter. The stronger the support resistance, so what does that mean? Okay, this is a good point. When you pick up a support or resistance or a fib level from the larger time frame, and the largest being the month, that is far more stronger than support resistance or Fibonacci coming from a hourly chart or a daily chart even. I'll repeat that. A Fibonacci level or a support resistance level is stronger on a larger time frame versus a smaller time frame. Okay, so that's another reason why I start from monthly versus an hourly or a daily. Reason number one. Number two, what I wanted to say here was develop some kind of your own standard, whatever color you like. What resonates best is if I'm doing a fib, and the fib is going short. For instance, in this case, if I'm going from high to low, once again from high to low, I would choose a red, going short. And if it's going from low to high, so if the fib is going up from low to high, I would choose a green. right? Why? Because when I do these fibs all over the place, monthly, weekly, dailies, and I'm looking, let's say, at an hourly chart to execute a trade, whatnot, I'm not able to see this whole big picture, right? So at that point in time, knowing my colors, red or green, at the back of my mind tells me there's a fib coming up or down, and that kind of is useful. That being said, I can always quickly go back on the monthly or daily and figure out what the fib, where the fib started from and ended from, and I keep doing that. So that's that. And once again, like support resistance on the fib, if the fib is from a monthly chart, I would try and make the lines a little thicker than the ones, let's say, that are on the daily chart or so. Another thing I do is, when it comes to fibs, I prefer to choose dashed or dotted lines versus when I'm doing a support resistance, I choose a straight line. And again, I'll do all that on the Aussie USD chart that I'm about to build in front of you. I just wanted to lay those standards out. That's the reason I do that, so it doesn't confuse me when I'm looking into those pairs to take a trade. Okay, so let's get started. Okay, so in FXCM, when you click on any price, so for instance, if I want to see this high, I could use this crosshair, of course, right? And I can get an idea. Let's say 98.25 or something like that, but I'm not sure. Especially if it's a monthly chart, a bigger chart frame, you move your mouse even just slightly, and you'll lose like 25, 30 pips, 15, 25, 30 pips, and that's a lot when it comes to precision. So the best way to reach precision is, if you want to expand a little bit, but you go on that candle and click it. When you click that candle, all the data comes up, and it stays there for like 2 or 3 seconds, which is just about the time you need. Now, my eyes have gotten used to this. Again, if you're new, it takes time. But for instance, if I'm looking for this high, I'm looking for the word high. If I'm looking for this support here, I'm looking for the word low. So once again, when I click this, right there is high. And I'm used to looking at it here versus top there. It's just a matter of getting used to. Once again, what I've learned, at least in forex and generally in life, is you get good by just doing it many times, and of course doing the right thing many times. So okay, let's click on this. The high is 98.49. As soon as you find the number, you go down here, select the horizontal line, click. Don't worry about it in precise, because you make it precise right here on the rate side. 98.49. For 98.49, I would leave it in gray. But one thing I'll definitely do is make it as bold as possible. I'll choose this is the levels of bold, right? Thickest to thinnest line. And here is the straight line, dotted line, dashed line, whichever you want. So for support resistance, I use the thickest line. Okay, right there. The other level I want is down here very quickly. So that's 60.05. Drag it like that. 60.05. Now, the other reason I wanted to do this today was, if you're new and you want to submit a trade plan, this is exactly what you're supposed to do. Right? Writing up a Word document comes later. But before you write the Word document, what I'm showing you, this is exactly what you're supposed to do. Draw up your support resistance fibs and then try and figure out where to go with this. Okay, so the next one I want to pick up very quickly from the monthly chart is down here. Now between these two candles, I know for a fact this one looks lower to me, so, but if you're not sure, you can click on both and figure out. So for instance, if I click on this red one low, it shows me 48.22. On this one, 47.75. So of course 47.75 is the one I want. 47.75, and type it in here. I make it bold, and that's what I do. Now you'll notice, okay, I'll just do it again up here. Once I select the line, I have to right click it back to lose the line feature, so that I can go back and click on the candle to get the price. Otherwise, if I don't lose the line feature, and I'll show it in a second, it keeps drawing the lines again and again for me. Okay, so just wanted to let that out. Okay, the next one I want to pick up is the peak here, which between these two, of course, seems to be the blue candle here, which is one. Okay, 10,792. And this red, of course, is lower. Yep. So the blue one is 10,792. All right, 10,792. And I pick up the thickest line, and there you go. The other one that stands out for me. So now, as I start scrolling the charts, now you might wonder, why am I wasting time? And I'm using that word purposely. Why am I wasting time to go all the way down to 47.75 or 60.005 when my price point is up in the thousands, 1.05? Two reasons really. One is I need to go all the way down and figure out the support levels in this case, for instance, to draw the fib. Once again, I need to know the levels down here, 60.005, for instance, a level down here, which I'll pick up in a second, or for instance, level down here, which I'll pick up in a second. In order for me to draw the fib from low to high, if I don't know those levels, I can't draw a fib. And when I draw those fibs, the reason I need that is because a 23.6 or 38.2 might fall somewhere closer to the current price. That's why, number one. Number two, I believe, and this is important, this is the reason why I keep emphasizing that everybody takes the time and does this, build what I call the inventory of charts and support resistance and fibs. It's because I like doing the effort once, rather than doing the same effort or half-hearted effort every time I'm about to take a trade. It's a complete waste of time. So if I take the time, and it takes about 20-30 minutes, an hour, depending on how new or experienced you are, you take all this effort, draw the support resistance lines and fibs, and you're done. You're done. And then you will not change these charts daily, right? When the price moves, maybe on a day chart, it might break some support resistance. But some of these big numbers, they will never change in the next week or months. So a lot of work is already saved, as long as you save the work, of course, and you don't lose it. All right, let's keep going here. Now again, this would take me probably 45 minutes to do because I'm talking a lot in the middle. But if I was to do it without talking, this would probably take 20 minutes. Okay, the high here is 82, and I may not be able to finish the whole thing today, but at least it gives you a good idea. 82.14 is what I'm looking here. Now this 82.14 would be helpful for a fib extension, not a fib retracement. I'll talk about that. Okay, 82.14, I got that. What about this low here? 80.64. Let me just make sure once again. 80.64.6. 80.64.6. My life was so simple when there were 5 decimal digits. Now it's, or rather 4. Now it's 5. I need to remember one more number. So let's make sure I got the number right. 646. Yeah, 646. 646. I got that right. Okay, the next one I want to pick up is this blue low, 93.86.4. 93.86.4. And just put it on bold. Okay, so I think I got almost everything I need on a monthly. Now I can always go down, and this is where I always fumble around. Do I need to really waste my time? I can of course go down and pick up this low here, 70.14, and this low there, 57.72. I want you to understand this point very well. I could have picked up these points as well. I probably would have on some of my other charts. But if I'm running short of time and I just don't have too much time, I would not worry about this. Why? I would not worry about this because I'm not going to draw a fib from here, for instance. I don't need a fib from here to here. This fib is gone, not relevant. And I won't draw a fib from here to here. Why? This is what you need to understand. It's because, see this, it went up to whatever this level is, 98.49, and then it broke past this fib. It broke below this fib down to 60.005. So the relevant fib, and it's important to understand, the relevant fib, if you want to look at it, is from here actually, 60.005 to 10.792. 60, and this is why I drew the line. See, now I can see the price points very well, except for one of them that blocks it. 60.005, and what was the other one? I think 792 something. Okay. I can check back later. Now, since this is a strong monthly one, I would choose I would choose thick lines, and it's already red. That's fine. Now make sure your style down here is red, and that style essentially is this vertical line or diagonal vertical line, the trend line. And on the levels again, actually I don't need the thick on the trend line. I don't want it too thick. That's fine. I can keep it light. On the levels, really, the levels, meaning, the 23.6, 38.2, all these levels. These levels are one thick. So see, this is the beauty. So now that I know my support and my resistance here, I can quickly draw a fib. This is a correct fib. Okay, it's from low to high. This is not a correct fib, in my opinion. So to pick it up from here, somewhere here, 71 something, up to here. This was okay until it was in between, and it had not broken either the high or the low down here. Until then it was okay. But once it broke below 71 something and went down to 6,000, this fib is no longer valid. So therefore you should not pick up this particular fib either till 98.49 or until 10.792. This low is no more valid. Now this low is still valid as a support resistance, so let me not confuse you. 70.14, and let me just draw this to show you what I'm talking about. So 70.14 is still a very valid support or resistance level depending where your price is. At this point, this is support. But the reason I won't waste my time on this when I'm probably doing my initial charts is because my current price is 1.0565 minus 7,000. I mean, quite a few thousand pips, right? So not to worry about it. That's why I would worry about the support level. Okay, I think I made that point pretty clear. All right. So I have, excuse me, I have what I need on my monthly chart for support resistance levels. Let me start drawing the fibs now. That's the next step I do before I move on. And so again, very simple. Once I have the lines, I'm looking from this low to high, 47.75 down to 10.792. So I could just go. Now you'll notice I won't. So when I draw a fib, and again this comes to personal preference. When you draw a fib, if you're looking from here to there, you can go from right on the dot or right on the candle to your right. But I prefer going a little bit on the side, and I do it a little bit of slant. I can do it this way. You can do it this way if you want. It doesn't matter. But doing it diagonally right, I've just been used to it that way. That's all. So you can do however you want it. Okay, so 47.75 and 792, and should be again a thick one. Nope, not the trend line. I keep confusing myself. I'm looking at the level. So level should be thick line, and that's probably it. Okay, that's my second fib. Okay. Now let's go and see what else do I need. Now these are two strong ones that I'm looking for. The next one I would pick up is this one here, this low here. Okay, from 80.64. 80.64 up to 792. 792. See, when I was drawing this, I didn't even bother. I just threw the fib somewhere up here, and then I can go quickly in the end rate or the start rate, depending, whichever one is relevant, and then draw it out properly. This is 80.64.6. 80.64.6. Now this one I would make a little lighter. Okay, there's no signs to this, please. I'm just doing as it suits me. Okay, so it starts standing out that this is a little bit shorter time frame than the ones I picked earlier. Okay, now the next one I would do is okay, so this low to this high. Now the next one I'm really looking for is, I'm almost done, right? As far as the lows to highs are concerned, going up. I picked it up from 47.75 to the top. I picked it up from 6,000 to the top. And I picked it up from 80.64 to the top. The next one I would do is down. And you can see when I go on the weekly or the daily, you'll start seeing it a lot clearly. So this time I'm going to pick it up from 10.792 all the way down to 93.80. 86. So this is the one. This is the one where I call the fib is coming down, short, right? So I could have called that. Okay, so I confused myself. This one should be going up, should be green in sorry, in my books. So I can just turn it quickly to green. The ones going down, I prefer to have red. And please don't get too lost in this. You can choose your own colors. You can keep them the way you want it. It's just that I like a little bit consistency. And the next one that I want, these are all going up. These are all going up. I want them green. Okay. Now the one that's going down, and you can feel free to expand your charts and see them a lot better. Now, if I go on the weekly or daily, I can see this a lot better. But that's the whole idea. But as the more you keep doing this, your eyes get used to it, and you can pick up some strong levels right from your monthly chart. So this one should be from 10,792 down to 93.86. 93. So I just got a comment from Bookie. I said just take your time and continue part 2 next week if not finished today. So Bookie, are you finding this useful? I'd like to know, because these are things I want to know, because then accordingly I can plan. You're finding it useful. How many in class are finding this useful? And please guys, feel free to say no. It's really okay. I need to know, because then I can accordingly spend time. So on the chat box, please type a Y if you're finding this useful. Because at times I tend to rush because I'm not, I don't know how you guys are finding this, right? Okay, so I'll keep doing and I'll keep an eye on the side. So far only 3 people have said they find this useful. Okay, 93.86, 93.86, 93.86. But guys, this is the core. In my mind, I'm not kidding with you. This may seem simple to some of you. And I'm guessing then if the others are not finding it useful, then you are somewhere between intermediate to advanced, quite frankly. Because if you're a beginner and it is, I'm going back from my experience. I remember this was very difficult. I'll be honest with you. Very difficult to pick this up correctly. Now you can pick it up. I can say, sure, I got it. Not a big deal. But once you start doing this, trust me, your bulbs will start going off, and which is why we encourage and at times become pushy, for which I apologize. But I think this is extremely important for you guys to learn. You need to learn how to use your tools. If you don't know how to use your tools, I'm sorry for using strong language here, but you're wasting your time. You're wasting your time. You're just in the market trying to cut corners or try and figure out, let me take this trade and that trade. Oh my God, look, I made a pip here, a pip there. But you need to know how to use your tools. Now, where you learn all this, Vicky, okay, so I learned it from Jeff, of course. Now, before Jeff, I understood how to use support resistance levels, of course. But Fibonacci's, it seemed, I was confused, to be honest. I didn't understand the importance of Fibonacci's, and Jeff Langen, our founder at the 1000 Tip Club, he really opened up my eyes, and Dimaze and everybody else who's in the forum. And the interesting thing here is, before I joined Jeff, I thought, Fibonacci was some kind of a rocket science, and oh my God, it's not. It's as simple as I'm showing you, just support resistance, high to low. And where people get lost, or where I used to get lost, was picking up the right levels. You can pick up the wrong levels and do the right Fibonacci, but that's a wrong number. It doesn't make sense. Why is it important? Because the macro funds, the sovereign funds, the George Soros funds, the Citibank funds, the whatever funds, so tier 1 traders, as we call them, they use Fibonacci. They use Fibonacci's and they use support resistance levels. And again, I'm not going to advocate for or against any other indicators, and I'm sure they work, MACDs or Bollinger Bands or stochastics. I can't even pronounce them properly. But I don't use them, and I'm sure they work. It's not a big deal. I went off topic to what I was trying to do, but I just want to emphasize that this is important. 10,792 and 83.86, I think it is, right? Okay, so this is coming short. This is red. Now, in this one again, since this is one of the first reds I'm using, I would like to keep it a little bold. Now the color schemes and all that, I mean, as I said, I came up with this on my own, and other students do it differently. Some students, I'll be honest with you, perfectly honest with you, some students in 1000 Pip Club, they don't prefer to draw out all these lines on their charts. Some find it confusing, and it's their personal choice. So this comes back to I just share what I know and what works for me. You can do it differently. Some people note it down in Excel. I have no idea how they do that, because I like visual stuff, and I think this is the best visual tool you have, as long as you use the right levels and draw it out right. So, okay, what am I looking at? 93, 86.4. Now you can get 86.4. This is 4 decimal digit. As I said earlier, my life was simple. They made it difficult by giving me the 5th decimal option, so I have to use it. I'm just kidding. Okay, all right. So you see from the monthly chart, I almost picked up right there. Right there is a lot of data, guys. Right now, it just happens that my price is around the upper level, 564 level. But as and when this starts falling, these levels start becoming useful. Why? Because as some of these levels line up, and heaven forbid, if some of these strong levels like line up to the pip, that's a very, very strong number to watch out for. Very strong number. Especially if it's going against the trend or even with the trend, and it falls or goes up like 150 pips, you know, what you call average daily moves, and it explodes at average daily moves, and it hits bang on a what you call confluence of Fibonacci's or a confluence of Fibs and support resistance levels. Very strong, very strong. That's probably a decent entry price to get in with a tight stop loss and try and manage it from there. That's the whole trick. Okay, the next level I want to do, which I can see right off my monthly chart, don't even go on my daily, is the top right here, right? So it hits down to 93.86 and then it goes back up, right? Now look at this, look at my candle. I'm not going to pick up this candle high, of course. I'm going to go sideways to the right. So between these two, the top here seems to be 85.55. So first thing I'll do is I'll draw a horizontal line. I probably will not choose a very thick one. 85.55 2, and I'll choose a little less thick because that's kind of more, you know, in the current time frame. And did I do that right? 85.52. Yep, that was right. So I got the fib here and right there, 85.52, 85.52, and this is 93. What is this? 86.4, 93, 86.4. 85.52. Now this is a green one. It's going up, so I just turn it to green. And this one I'll make it again a little lighter, but not too light. And again, I have to say there's no rocket science to this, so choose whatever color you want or whatever thickness you want. So right there, from my monthly chart, I picked up whatever I want. Now, I do appreciate it's a little clustered towards the current time frame, and that's the way it should be, right? But trust me, once you do this and you start taking some trades based off this, you will bless that you attended this class if you were not doing this from before, and you learn this trick. Okay, so next thing you want to do is you want to open up on a weekly chart. And look at that. Isn't that beautiful? You just spent a lot of time doing the monthly, and on the weekly you already have it. That's the whole point. Here's something else that's beautiful, if you haven't seen already. See this, actually I'd like to go around quickly on a daily and show you something. Yesterday's, not yesterday's, in fact today's, is it today? Yeah, this is still the current candle, this is daily. The current candle low is 508. The current candle low is 508. And what is that, 23.6%? See, I picked this up from a monthly chart. Remember what I told you? On monthly charts, support resistance fib levels are very strong. From 93.86 up to the current high, 85.52, 23.6%, which if it maintains means it's still kind of at the bullish trend. breaking 23.6 and then going down to 38.2 and breaking that gives you a chance or hope of reversal or whatnot, and then kind of going to 50 and so on and so forth. But nonetheless, just to make it very simple, like I would tell a 6-year-old, is if it hits 23.6%, it's a strong level. That's all you need to know. If it hits 38.2, it's a strong level. If it hits 50, it's a strong level. Now, where people tend to get confused, and I'm going back to a couple of years back when I used to get confused, is, well, I might see 23.6 on a daily chart. Is that more powerful than 23.6 on a monthly chart? And how is that the same? How is that different? And I'll go back to my first statement. The Fibonacci retracement level or the support resistance level is stronger on a larger time frame versus a smaller time frame, right? So the 23.6 that you're looking at, that it hit right now, is based on a monthly chart because we picked it up from a monthly chart. You can argue with me and you can say, well, I could have picked it up from a daily chart as well. Sure. Again, just don't get too lost. Look at the time. So if you look at the candle here, what I'm trying to show the date down here, this started from October 2011. And here's another way of changing your mindset or shift your way of thinking. These brokers or whoever designed these price charts, they had to pick a certain time frame. Okay, so I'm sure they could have pick up years as well. I'm sure they can do that. They didn't come up with years. Okay, and if they could go back a century, right, they would give you 100 bars for a yearly candle, right? So we don't have a yearly candle, and I don't know how much meaningful a century would be. But they started from the monthly, okay, and they could only go back. So for an FX, what do you call on FXCM, it goes back until 93. On some of the other platforms like Thinkorswim, I think it goes back 85 or something like that. But 93 is good enough. It's not bad. It's a lot of data. But the point I'm trying to make here is they have to start somewhere, and they have to pick up a logical start. So they picked up monthly. Excellent. Then they said, what's the next logical start? They said weekly. So, week. Then what's the next logical break? Daily. What's the next logical break? Well, we had hourlies for some time, but dailies, and they went and divided by 3. So they picked it up, 8 hours and 6 hours and 4 hours and 3 hours and 2 hours and 1 hour. And then they broke the hourly into, half of the hour, 30, then 15, and 5 and 1. Let me say this, and I don't think I've said this before ever, but I think we get too lost into these details. The whole idea is is just a magnifying glass. Think about what I'm saying. It's just a magnifying glass. If you are a beginner and you don't understand the importance, for instance, this red candle, I'm on a monthly chart. If you don't understand the importance of this red candle spiking down to 96.62 and the body being a little bit short, right? And what would the daily look like? Well, if you're experienced, you'll understand this. But if you're not, if you're a beginner, well, you know what? Go down to your what month is it? November. So you can go down to your daily, right? You can go down to your daily, right? And let me pick up November. So I'm going a little off topic from support resistance and Fibonacci, but I think this is important because this is multiple time frame. It all ties in together, in my opinion. It all ties in together. So here's my February, here's my November 1st, and here's my November 30th. This may not be precise, but it gives an idea. Okay, now look at this. Right. Started from here, this top, sharp move down, sharp move back up, closed here. So this high to this low is the body of the monthly candle. All this would be a wick. All this down here is just a wick, right? Now, I can understand that. If you can't, then you'll learn, right? But if you're a beginner or if you're new as you're learning chart reading, as you keep drawing your lines, your support resistance, your fibs across multiple time frames, I know it sounds silly, but something inside will click. That's the best way I can explain this to you. Not something. Lots of things inside your mind will click. And I'm going back to my school days, guys. And when I was, I probably wasn't the brightest in school, but probably because I didn't study as much. But when I started my CA, the only thing that changed was I studied a lot. I had to study like 8-9 hours a day. And just by going in and day out to the library, whether it was hail or storm or whatever it was, just by taking that effort and studying every single day for 8 to 9 hours almost, it clicked. Something inside just clicked. You become smarter doing this. Let me just pause here because I think this is a very important, and I can continue this next time as Bookie's saying. But I'd like to have a quick chat and ask people, what do they think about this? Because this, I think, is very important. The longer you stay, whether in the market, in forex, in your business, in accounting, doctor, engineer, whatever, the longer you do things and keep doing it, you'll learn things. Now, just make sure you learn the right stuff and don't waste your time on wrong things. And it's a little difficult, right? Because there's so much out there, right? So what do you choose and what do you so go with something and then try and see how it works. But the key, at least what I've learned, is if you pick up something and you just keep doing it day in, day out, you will automatically become smarter because you'll start seeing it in real. It'll unfold in front of you, in front of your eyes. Which is why we offer these classes on FX Street, the 10,000 rule. Yeah, that's it. Which is why we offer these classes on FX Street, which is why, and I see that as part of my job to do this, and I apologize if I become rude at times. I don't intend to become rude. But I see my job as to push you. So if I'm the right coach, then I'm supposed to push you to submit the trade plan in class. Now, if you do not understand how to submit a trade plan in class, then you need to let me know, okay, so I can guide you better. Now, some of the trade plans that you've seen before, again, I don't know if they're here. Mark Knight, I think it was Charles, and 4718. I mean, fabulous job. I mean, you overwhelm me. Forget overwhelming some of the students in class, right? But if you're new, this is all you're supposed to do, guys. What I just said today, just go over it again. Draw your support resistance levels, and you would almost repeat this exercise. I'm almost out of time. But you would repeat this exercise down to your day. So you'd go down to the week. Now look at this. When you go down to the week, how much else can I do? There's not much left. If you do a good job on the month, and you don't have to, because you all can always go down to the week. See on the week, how much else can I do? I don't want to go back on these lower levels down here to 6,000 or 8,000. I've picked up those levels from the monthly. So guys, here's another secret. Now pause and listen carefully. When you go down to the shorter time frames from the month to the week, you don't worry about the left. You don't worry about the left side of the chart. Just focus on the right chart. So the only thing, the current time frame, the more current time frame, right? The past few months or past few weeks, essentially. So the only thing you may not have picked up properly from the monthly chart when you go on the weekly is maybe some of these levels here, okay? Which, as you can see, I didn't. And I'll show you. These tops right there. These two tops. One of these two tops is very important, which earns the highest. 76.36 and 752. 752, 76.36. So 76.36 is higher, of course. So 76.36, you start drawing some lines here. 76.36. And maybe make it a little, right there. I won't worry. Now, initially, again, I keep going back to my own experience because that's what I can relate to and hope that some of you can relate it. Well, I got a little lost between 76.36, 63, and 752. So 63 and 52. Now, you can also draw a line there, right? 52. You can draw a line there, right, and feel a little better. Did you pick that up? And that's fine, and that shows you it almost double topped, right? So somewhere between 752 and 763, right? If it comes, it's a good opportunity to take it. So it just shows you that's a strong level, double top, and probably you should put a line there. But my point is, at my level, I probably won't even bother. I'll just choose one of them. Why? Because I don't want too many lines. Coming from me doesn't sound right, but I don't want too many lines because it can get very confusing. Look at my euro, right? Now, can you imagine if I start putting what you call support resistance levels that are just 10, 15 pips off on a monthly or a weekly chart or even on a daily chart, it would kill me. I would lose focus. I would not be able to see what's going on. So choosing your levels right is very important. 5, 6 pips, between 5, 6 pips on a monthly chart. If you have two levels, just pick the one that's highest or the lowest. Don't worry. That's my rule. It doesn't have to be the right way of doing it. That's the way I do, just to keep my focus. Okay. Now the next thing I would do is, if I go on the weekly, we have a few more minutes. I can wind it up. The low here. This is amazing, guys. Look at the low. It just came and hit the 23.6 from 93.86 all the way down to 8.55. Right. Overall, I still think the Aussie should be going short. Just so you know. Again, this is the risk of sentiment. Greek. You know, I don't want to go through a long list, but you know, 2 weeks back or 10 days back, whatever, Greece approved, and then the EU ministers met and they approved, and then they're having a rethink, and people are kind of writing again in the news, and you know, austerity will not give you growth, and kind of we knew all that, but people are still going a little bit back and forth, and it's just a natural way of things will play out. 2 or 3 weeks, people have a risk-on sentiment, and then reality hits, and then so the level I'm looking at right now is 508, let's say. Now, even though there's a fib, I would probably draw a line here because that is the current support. Now, that's another interesting thing. It's a current support. If today or by tomorrow it breaks, I don't need that line, so I could probably remove it. But in order for me to figure out, now I can go quickly on the daily. Now I would do a lot more in real time. I would do a lot more in terms of my weeklies, right? But the next level I'm picking up right there is this low, right? 596. 596 right there is a nice level. 596. Now, guys, I have to say this. Any price points you get out in class, please do not take it in live account. If you feel free to take it in a demo account, I don't want you to, if you're especially new or beginner and you don't understand leverage and all that stuff, and market timing and when to take a trade and whatnot, that you can do to your account. So be careful. Okay, 855 to 508 right there, and that's what you would do. 855 to 508, right? And this one is coming short. That's fine. So now I can start seeing a little bit closer. See, guys, I'm on a daily chart. I've not even gone down to an hourly chart so far, and you don't need to really to figure out nice levels now. At this point in time, I think Aussie's, what is Aussie's ATR? Aussie's ATR, I'm looking at my Think or Swim platform on the side. Bear with me here. Aussie's average daily move is 96 pips. So over 15 days, if you averaged highs and lows in Aussie, you're looking at 99.61, so about 100 points, right? Okay, so about 100 points is the move. Let me try and put this now in. This is what I'll start doing. If I'm looking at a trade at a certain level, I'll start putting in a little bowl and little blue, so it's start standing up. At 596, if it hits 596, it's a prior support and resistance. From this high to this low, 23.6 is 589, so kind of a few pips off. My low is 508, and if I take this ruler and I go from roughly 508 or whatever down to here, right there, to 596, that's 89 pips. That's not close to 100, so I wouldn't feel probably comfortable. And maybe if I look at this level of the curve, it's 121. Okay, so at this point in time, the next 24 hours, if it came somewhere between 596 and what's that level? I'm not saying it will. I'm not saying it won't go past it, because I don't know the news that's about to come out in the next 24 hours. I don't know. Okay, but just based on the fact that this pair was going sideways for the past few weeks in the channel, and the channel low was 596. And like, by the way, I hope I'm not confused with this. If you look at the Kiwi, the other pair, right, in the same region, it was going sideways, and the low there was 824.38, and it broke past that without blinking. Tells you something, right? And if the euro is also taking a dive down, So the three risk currencies are taking a dive down for the past few days, with the Aussie breaking its channel low, 596, with the Kiwi breaking its channel low of 824.38. Do you think it's going short? Okay, so if you think it's going short, if that's your view, which is the way you should write in your trade plan, then you try to find an opportunity to take it short, and that opportunity is a retracement, guy. That's a retracement. You should not take it right at the bottom. That's the worst thing that you can do. Be at the end of the buffet line, right? Let the buffet be served again so you can, fill up your plate quickly as possible. So if it backs up around 596 or 627, that's probably a decent price trying to take it short again in the absence of any positive risk on sentiment kind of news. Now, the one news that so let me go quickly on. I'm about to wind up now. So can you see my Bloomberg? Give me a quick why. So if you can see Bloomberg, and if you go on news and then markets and currencies, under currencies, this news was interesting. RBA Israel, he made a statement here. Australian Central Bank's threshold for intervening to temper gains in the local dollar is quite high. Can you spell Bank of Japan? Do you think Bank of Japan? Can you spell Swiss National Bank? Right? So these are the kind of things that these central bankers do. So come up with, I call this a threat. Okay, I call this a threat. So the Australian Central Bank threshold for intervening to temper gains in the local dollar is quite high, as officials monitor the impact of a stronger currency. Now, I'm sorry, I don't know the currency back again, but if you looked at the currency, it went all the way to 855, right? So it's bad for exports. They want to control that, and they're almost thinking, well, the Japanese guy did it, the Swiss guy did it. Why shouldn't I do it? Right? What should hold me back? So there you go. There's a threat. It's difficult to make a strong case that the exchange rate is fundamentally misaligned, Lowe said in response to a question from the audience after a speech in Sydney, citing the nation's solid economic market. That makes the hurdle for intervention quite high. Now, let me get back on the charts. Okay? You with me so far, guys? So the central bank, he's not the governor. He's a deputy governor, but he's as good as the governor. He's a solid figure. So he's saying that intervention is possibility is quite high. You are seeing the pair started dropping. There's again issues in Greece and Euro, whatever surfacing. Both Aussie and Kiwi have broken out of the channel. Euro, as I showed you, is going short. It hit a 23.6% level and kind of paused a little bit. So far, it's in a doji. So do you think if it comes to 596 or somewhere between 627, there will be a good chance to take it short? What do you think? Yes or no? So that's how you do a trade plan, guys. That's all. That's your trade plan. What I just did with you. But I gave you the basis, I gave you the logic, support resistance level, I gave you the fib level, the trend, the charts, fundamentals. So was that helpful, guys? Any questions? Does it make sense? It'd be nice to get some feedback. Yes, no? You're welcome, Bookie. So, is there something you'd like me to continue next week also if there's no trade plans in? I'd like to see some trade plans in because, guys, if you send the trade, you're most welcome, guys. Thank you so much. I appreciate it. If you send the trade, here's the benefit. Now, I can keep doing this on different pairs, and I'm sure you guys will learn. Not a big deal. But those of you who are willing to step up, it will benefit you the most. And I hate to use strong word, but I almost guarantee you, almost promise you, if you're new, especially if you're new to a beginner in these markets, right? Take the effort, go back on this class. This will be archived. I'm sure Linda can type it in. So this will be archived and put up there. You can go back through this class, and definitely you can go back to some of my prior classes under my name. So you can go under fxstreet.com and Edinda or Mod. Can you please put in a link so people know? You can go under my name in the speakers, and there's a bunch of classes. You can go back to some of the prior classes I've done. That'll give you a lot more details. You can also go on 1000pipclub.com and go on. I think there's a free training site that we have, so some more details there. But okay, guys, I'm almost out of time. Glad you guys could make it. I'm looking forward to somebody sending a trade plan next week. And when you do, I'll do something almost similar with you. But those who send in the trade plans, I think will learn the most over a period of time. Thank you, and see you next week. Bye now.